Hello traders, the title of the video is a technical trader is the debunking a specific misunderstanding of moving averages, a crossover. Alright? So you have been using moving averages for years. Probably you hate moving averages so much that you are likely to click away from this tutorial. But before you do so, I want to encourage you to watch at least 10 minutes of this video so you may understand more why the moving averages crossover is a powerful technical signal that you have been misusing for years. All right, so recently, I have recorded a video that I titled GSTW24 System Trader Explains How to Avoid Moving Averages Whipsaw Like a Pro. And I posted that video at Georgetrio YouTube channel. So you can too search that video, GSTW24 System Trader Explains How to Avoid Moving Averages Whipsaw Like a Pro. So today, I want to debunk. So you may say, Joe, your English is improving. You are using difficult words. What's the meaning of debunk? All right. To debunk an idea is to expose the falseness or hollowness of that idea. So I want to debunk all the misunderstanding, in fact, a specific misunderstanding about moving averages crossover. Are you ready? All right, let's get started. Now, there are different types of moving averages crossover. So, in general, we will talk about bullish and bearish. But apart from those two types of moving averages crossover, there are more. There are some moving averages, when they cross, all right, the price will be at a resistance level. So, it's a bullish crossover. So, you may have a bullish crossover, two moving averages crossing, a lower term, a short-term moving average going above a long-term moving average, so 20 going above 50. Is a bullish crossover. At the time when the crossover is occurring, the price will be at a resistance level. So instead of buying after a bullish moving average crossover, you should be looking for an opportunity to sell. And I will explain it to you in this tutorial. So now I want to debunk that misunderstanding. So next time when you are using a moving average crossover, you will avoid those errors. There are another type of moving averages crossover when you have a bearish moving average crossover. So a short-term moving average goes below a long-term moving average. The price will be at the support level, which means a bearish moving averages crossover occur, but you will buy instead. You will be prepared at that point in time when the crossover occur, specific time at the time and the place. Not another time, straight away when it crosses. At that point in time, the first thing that should come into your mind is to look for an opportunity to buy instead of selling, though we have a bearish moving average crossover. In fact, I have written an ebook about all the misunderstanding about moving average crossover. But I have never published it because I am reluctant to share those secrets in a public place. But this is one of them that I'm sharing with you. So I want to see the reaction, before I will spend my time or I will even bother to publish it, all right? And also there are a lot of copycat out there, and we don't want those people, all right? So the typical one that I will share with you today is a moving average 20 and 50. When a moving average 20 goes below the moving average 50, 80% of the time, you may have some exception, all right? 80% of the time below, when the 20 goes below the 50, 20% of the time the price will be at the support level. At that point in time, you should be looking for an opportunity to buy instead. though there is a bearish crossover between the 20 and the 50. Now, this is not true for any type of moving averages crossover, but this is true for the 20 and the 50. That's what I'm saying to you. We have different type of moving average crossover. Apart from the bullish and the bearish, there are different categories of moving average crossover. And the 20 and the 50 is a specific category of a moving averages crossover. All right? So when the 20 goes above at the time, so I'm going to place the vertical at the time when it cut through, you see here, we don't want it, we don't say when it was passing through it, when it cut through it at the first time, that's the, where was the price? The price, 80% of the time, not always, so there will be some exception, the price will be at a resistance level. There is a zone here, the price did find a support in the zone, right? The price was retesting that zone here. At the time when it crosses over, it will be better for a trader at that point in time to look for an opportunity to sell so you can sell it down. So what I was telling traders how to avoid moving average crossover, I was telling you that when 20 goes above the 50, wait for a pullback. So all you are doing with this method, you are trying to trade the pullback, and then you will pull back, you will sell it down, and you will buy it again later on. 80% of the time you will see that. When a 20 also crosses above the 100, very often, 80% of the time, this is the same category, 20, 50, 20, 100. The price will be also at a resistance level. You see, when it cut, you see 20 is the green one, cut to the red one, which is 100. When above it, the price will be at resistance level. The opposite is also true. When the 20 goes below, you see here, 20 goes below the 100, the price will be at a support level, 80% of the time, not always. Let's see. Let's see whether this is here or not. So it cut through it. We were here in this zone. Were we at a support level? Yes. You see, price turn around in that zone here. Support level. The price is at a support level. So it's a bearish crossover when the 20 was going below the 100. It's a category of moving averages crossover. Price at a support level. A more advanced trader that is more careful. If you don't want to, it's because it's a risky trade. I need to mention that that trade is a contra trend. But because you understand what is taking place and you know how to trade it using a top-down trading method, you can take advantage of it, yes or no? But if you are a new trader, it's better for you to wait for a rally and sell instead after the bearish crossover. But what we are doing here is a little bit risky. But because we understand it and we know how to trade it, we are advanced traders, you can buy here using a top-down trading method and take your profit on the edge there. Though you have a bearish crossover, it's a category of a bearish crossover. The first intention is to buy and then to sell later. So you will buy up there and then you will sell it again like a master. All right? But if you are a new trader, you may decide to stay away from that because it's tricky. But the point I'm making to you, there are different categories of moving average crossover. Sometimes when a bearish, specific bearish crossover, not every crossover, specific bearish crossover occur, you may notice that the price will be at a support level. That's why people get whipsaw. The price at a support level, they try to sell and they get taken out before the price will change direction. 20 goes above the 100, you see again here, yes, the resistance level. But we are here, it cut through it for the first time here. Am I still here? Where was the price? At the support level. I'm talking about this. Let's move this one away. Price is where? At the support level. You see here? 20 goes below the 100. So what can we do with that information? That's a very good question. Did you ask that question? That's a very good question. We can scan for stock ladder. So we can go to our TC2000 and look for 20 and you apply the formula 20, 50 crossover. So you will say 20x 50 down, 20x, so 20, all right, space S space 50 space down, or 20 space X space 50 space up. So you can scan for those stock, all right, and you have a list. or those stock, or those currencies, or those financial instruments, or those security. So at the time, so which means exactly at the point when it cut away, that's what you're looking for. Not before, not after, not later, no later. Okay, straight away when it happened, you will see that. Right? And then you have a basket of those securities, and now you select the one that you like. So what you will do, if you scan for them, you have the list of those stocks. Unless you are a business, a trading company, right? You can just basket trade them. All right. So I said to traders in a video when I was talking about stock screening last time to a trader, we were saying to you the step that you must follow when you are using the software to scan for stock. So the software will bring the list of the stocks, and the next step is to do the manual verification to filter out, all right, the dirty stuff from the good one. So so if you do a scan, you have a list, all right, of financial instrument, all right, and now you proceed to the next step. Some of the setup will not be viable, so you will discard them. You will not trade them. You will not be interested in those ones. You only pick the good one, the best one. You give yourself the best. People have been giving you all kind of useless stuff. They give you the thing that you don't like. Now you have the opportunity to give to yourself what you truly like. So you will make sure you give yourself the lion's share, the biggest portion, the best opportunity. So after the scan, you go through it visually. Okay? Go through this one by one. Yeah, check them. Is it good? So this one, I will look at it. All right. Software brings us, look at it. Oh, yeah, I like this one. It's a bow, a prior high. So the prior went out from a high. Then when I retest it, now I will prefer. It's a risky trade, as I told you. This one is a risky trade, but I will give it a chance. After the trade is kaput, top down to the middle, I will swing trade it there, grab my profit, go like a master. Then I will sell it again here. Because after the rally, we know that how to avoid moving average crossover whipsaw. Am I talking too much, or am I revealing too much of my secrets about moving averages crossovers? So I talk about 20 and 50. I also talk about 20 and 100. There are some moving average crossover. When they occur, we will have a breakout or a gap up. Do you know that I know that? So you may say, Joe, how do you know all this? That's another very good question. That's why sometimes I get emotional when trader makes some comments under my video, because I lost so much money, all right? So I consider myself as one of the traders that lost, talking about the number of trade that were losing trade for me. And I came to a point where I decided to understand exactly what is happening in the market. I can tell you a true story. It happened to me one night when I did not sleep. So there was a day, there was a night I did not sleep, and there was a day and I did not sleep, and another night I did not sleep. I was on the chart. I want to understand. So some of the things that we are sharing with traders, traders dump it like a hot potato, or people say things, but the whole purpose of it is to help traders not to lose as I did, or not to get into the same problem. So they may start on the right feet. So somebody give you. So I live in London. So if you come to London for the first time and you ask me, George, what do I need to know? I can tell you a few things that you need to know about London, yes or no. So if you live in Texas, I have some traders at Texas, and I'll go to Texas. I can contact those traders and say, what should I be aware of? And they can tell you, Joe, don't go here, don't go here, go and visit this place. So this is about the experience. All right? So all I'm telling you, the reason why I know is because first, I want to know. As I want to know, I dig into it. Why the price is behaving the way it's behaving. So some moving average crossover will occur, and 80% of the time after that, the price will gap up or gap down. All right? So what I'm sharing with you is through experience that I find out all this. That's why sometimes I'm emotional about it. The same thing you see. Now, let's keep it short, okay? Because it's about moving averages, the crossover. So all I will I will say to you on YouTube, people are posting every day free material. Don't just work on it and insult the YouTube creators anywhere, anyhow. It takes time. It takes a lot of energy for somebody to make a video and to share some information, show some appreciation, and they will really like you for that. And it also will create a good YouTube community, yes or no? All right. So I think I've said enough talking about a technical trader is debunking a specific misunderstanding of moving averages crossover. So a bearish moving average can occur. At that point in time, we can buy safely if we know and understand exactly what is happening. So one example is when the 20 goes below the 50 or the 20 goes below the 100. There are other crossovers that are doing exactly the same thing. And I know the criteria why this is happening. Sometimes we may have a bullish crossover. At that point in time exactly, the first thing that should come into our mind, though we have a bullish moving average crossover, we should be looking for an opportunity to sell because the price will be at a resistance level and it's due to pull back before it will go up. Isn't it good to know some of those things? I think so. Personally, I think it's good to understand what is happening, as I'm showing you now, what is happening in the financial market. If this video has been truly useful to you, please let us know by giving us a thumbs up. If you dislike it, mark it down. If you think this is an essential tutorial that can help other technical traders, feel free to share it on Tumblr, on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, feel free to subscribe to our channel. It is free, all right? Anytime, and make sure you click on the notification bell. There's an icon there. Click on it. So anytime we record a new video, you will be the first person to be notified. Sometimes I post video almost every day. If it's too much for you, you say, oh, George, too much notification. All right. Turn off your notification that time and then come back in your own time to watch the video. All right. If I say something, all right, and you are upset with me, you say, George, you shouldn't have said that. Oh, George, oh, you are talking about against my religion and so on. You are upset with me for one reason or another. Okay, and you unsubscribe. After a few months, all right, forgive me and come back again and subscribe. We want to keep you, all right? So this will conclude our discussion today about a technical trader is debunking a specific misunderstanding of moving averages crossover. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about a technical trader is debunking a specific misunderstanding of moving averages crossover. Thank you for watching, and I will speak to you soon. The word debunking, D-E-B-U-N-K-I-N-G, means, all right, to expose the falseness or hollowness of an idea or belief. People believe that moving averages are useless, all right, but they are not. It's just because they do not understand them and they don't know how to use them. This is one example of debunking those misunderstandings about moving averages crossover. Thank you for watching.